be advised that this recorded webinar has been edited from its original format, which may have included a product demo. To set up a live demo or to request more information, please complete the form to the right. Or if you are currently not on CSE Global, there is a link to the website in the description of this video. Thank you.
Hello everyone, and welcome to today's webinar, Fast Track to Asia Pacific Funds Market, Navigating the Complexity of Entering a New Jurisdiction. My name is Annie Triboletti, and I am a member of the CSE webinar team. Joining us today are Ling Kaur and Delphine Jones. Ling is the head of Fund Services Asia Pacific and a member of the management team of Intertrust Group, which is a CSE company in Hong Kong. In her role, she oversees the development of business and the delivery of services to alternative investment fund clients in Asia Pacific. Delphine is a Managing Director of Client Solutions with CSE Global Financial Markets. She has more than 25 years of investment fund experience, including more than 10 years concentrating on alternative investments. And with that, let's welcome Ling and Delphine.
Hello, and thanks again for joining us for Fast Track to the Asia Pacific Funds Market. During today's webinar, we will cover a bit about CSE, discuss trends in the Asia Pacific, common fund structures, why choose a third-party service provider, and how CSE can help. CSE is a 120-year-old privately owned company that provides services in every phase of the investment life cycle, from entity setup and registration to final termination and liquidation. We provide tailored fund administration and solutions to alternative asset managers across multiple fund structures and strategies in more than 140 jurisdictions in the Americas, Europe, Asia Pacific, and the Middle East. Ling, inflation has been a hot topic in the U.S. and Europe. The global inflation rate increased to 7.4%, yet the APAC region has so far avoided the worst impact, with inflation reported at only 5.6%. Can you start by telling us what is happening in APAC, especially in the private capital market?
Sure. Thanks for the questions. Obviously, we don't have a crystal ball to tell if inflation in APAC will catch up later. However, it will not surprise me that things happens in the U.S. and Europe will somehow impact Asia as well. Perhaps just a matter of time. Just like the increase in the interest rate by the Fed, right? It has somehow impacted influenced the monetary policies of many central banks in these regions as well. So I would say globally, including APAC, we are seeing greater uncertainties indeed. In terms of private capital space in APAC, if I were to compare last year to year 2021, the overall deal value, exit value, fundraisings are all declined. On the other hand, dry powder continued to build up and higher returns is actually reported in Asia last year. So I will go a little bit deeper on each of this by reference to the Asia Pacific Private Capital Report published by Bain just a few months ago. Let me start with deal value. So APAC deal value dropped by approximately 44% last year, from $354 billion to 198 in 2022. There are lesser deals in number, and the average deal size is smaller as well. Obviously, the depreciations in local currency has played a part and impacted deal size in terms of US dollars. Similar decreasing trends we see on the exit valued. Exit valued reduced from 199 billion to 133 billion US dollars last year. Similar trend also noticed for the fundraising trend in Asia, very similar to the global trend where we're seeing a slowing down last year, about 100 billion US dollars being raised as compared to 184 billion raised in 21. Having said that, the APAC focus dry powder, which is the undeployed capital commitment. It marks another record high at $676 billion last year. As for overall return, which are very important for investors, the APAC private equities returns increased to a new high of 15% from 13.9 in 2021.
Okay, fantastic results. So APAC then continues to be a hot spot for investments, and as you mentioned, with a record high level of dry powder. We understand that new fund structures are being introduced by local governments to facilitate the growth. What are the respective local developments? And if we can, let's start with Australia and China.
Sure. To start with Australia, firstly, CSB, we do have office in Melbourne and Sydney, including a fund teams that already supporting many international managers invest in Australia and New Zealand. So Australia has been making very good progress in the technology and fintech sector. Of course, real estate continues to be a very important asset class for the Australian market. Australia is now ranked 4th in the JLL Global Real Estate Transparency Index, which covers 94 countries and more than 150 cities globally. For China, QFLP, which is Qualified Foreign Limited Partnership, is one of the options available for foreign investors and GP to invest in China. So QFLP first launched in 2010, and there's a total of 90 foreign institutions that have received approval for QFLP programs, which amounting to $7 billion as of June this year. So we continue to see names of well-established foreign GP added onto the QFLP list, which is very, very encouraging.
Okay, let's move on to Hong Kong and Singapore. They both play important roles as APAC financial centers. Hong Kong continues to be the largest asset management hub in Asia, and Singapore has shown a strong growth in recent years. Can you share your observations for both jurisdictions?
Yeah, more than happy to. So to start with, I must say it is not uncommon for GP operate in both Singapore and Hong Kong to set up funds or investment structures in offshore jurisdictions such as the Cayman Islands, BVI, Delaware, and etc. Traditionally, there is very limited choice of fund structures available in APAC region, and offshore structures continue to be a very popular choice as we speak. Having said that, both Hong Kong and Singapore governments have introduced new local structures over the past few years, which I think is a very good thing for investors and GP with more options available to them. So in Hong Kong, the local government introduced open-ended funds company, the OFC, in 2018. So there's more than 100 OFC with more than 200 sub-funds registered with SSC now. Another Hong Kong structure called Limited Partnership Funds, the LPF, has also been introduced in 2020. So as of July this year, July last year, more than 500 Hong Kong LPF have been set up. The LPF has attracted quite a bit of attention with local and international managers to set up LPF for their investments in Asia. So the Singapore government, likewise, introduced a new fund structures a few years ago as well, the Variable Capital Company, the VCC. There is over 1,000 VCC registered as of Q2 this year. Most VCC have small to medium asset size. It's not only, the VCC itself not only gain attention from the traditional fund practitioner, instead also very well received by the private wealth sector. In terms of split, half of the VCC are set up for private wealth-related investments, and the other half are evenly divided between hedge funds and private equity funds.
Ling, you mentioned local structures in APAC earlier. We understand that APAC funds have traditionally used an offshore fund and investment structure. Can you tell us a bit more about the local fund structures in APAC?
Sure, you have rightfully pointed out that it's very common to use offshore structures for funds raised and or investments in APAC. So offshore structures, again, remains important to this part of the world indeed. Having said that, I myself, as a very long-time fund practitioner, and I believe same as many of my peers in the market, we are really happy to see local initiatives to introduce and to promote local structures. I will talk through a few available local structures in Australia, China, Hong Kong, and Singapore. Just to be clear, this is not a complete list of structures available in APAC. You can talk to our experts should you're interested to know more about this. So let me start with Australia. Unit Trust, Limited Partnership Funds, Corporate Collective Investment Vehicles, the CCIV, are among the available structures in Australia. The unit trust can be used on both open-ended and closed-ended funds. It is simple to establish and provide great flexibility. Limited partnership funds is usually used in the venture capital space. They need to be registered with relevant state regulator. CCIV is managed by a single corporate director. It has similar tax treatment to a trust structure. Going to China, so we will introduce 3 available structures in China. The first one is Limited Liability Partnership, the LLP. This is the most common structures for domestic private equity funds in China. Share-based fund structures are far less common in this region. Qualified Domestic Limited Partnerships, the QDLP. QDLP allows foreign managers to market their offshore investment product in China, mostly targeting institutional investors and high net worth individuals in China. This program is quota-based, which means that managers need to obtain local approvals before they can launch the product in China. Another one is called QFLP, the Qualified Foreign Limited Partnership. This is one of the important channels for foreign investors to invest into China. Very similar to QDLP, one would need to get local government's approvals to operate a QFLP funds as well. Next on Hong Kong and Singapore. To start with, both Hong Kong and Singapore are practicing common law, and as such, there is a high level of similarity to operate this local structure as compared to other well-established offshore structures. Hong Kong, there are 2 new fund structures available in Hong Kong. We talked about this slightly earlier, namely open-ended funds, the Open-Ended Funds Company, the OFC, and Limited Partnership Funds, the LPF. OFC is an open-ended structure in corporate form with limited liabilities and variable share capital. OFC can be a single fund or an umbrella fund with sub-funds, where each sub-fund has segregated liability. The applications of OFC will go through Hong Kong Security and Futures Commission, the SFC. SFC is the equivalent of SEC that we have in the US. The LPF is very much similar to other partnership structures in other jurisdictions. It allows the GP and LP to freely contract according to their intentions and investment plans. Singapore, the Singapore VCC, again we mentioned that before, has attracted a lot of attention since launch. It is meant to cater all types of investment fund in Singapore. The BCC can be formed as a single standalone fund and or as an umbrella fund with sub-funds, each holding different assets.
Ling, is it common for international managers to outsource fund operations in APAC to third-party service providers?
The short answer is yes. Most managers outsource some, if not all, of their funds or general operations to third-party service provider. This slide gives you a few reasons or outline some reasons why third-party service providers is used in this part of the world. So, number one, relatively lesser international managers have a full presence in Asia. And as you would have imagined, there's a lot of effort and investment needed to set up a new office and new team. Just to name a few, such as office space, systems, hardware, people, and etc. Also, APAC as a region covers a number of countries and jurisdictions. which means one need to manage and master different local requirements, rules, and regulations. Another reason for outsourcing is people. Just like everywhere else in the world, the post-COVID norm has also impacted working patterns in APAC. This brings challenge when it comes to recruiting and moving employees to new jurisdictions to a certain extent. Unless and until we have a big enough setup locally, the typical setup is smaller in each location in APAC, which means lesser support and operations infrastructures. With that, it's very common and almost a pattern, if I may say, that managers come into APAC to adopt a full or hybrid outsourcing model.
Ling, can you share with us the type of challenges that fund managers and GPs will face when they first operate in APAC?
There are certainly many challenges that one can expect. Maybe I can answer this by giving a few examples instead. So let me start with taking examples such as compulsory staff retirement funds contributions to start with, right? Different locations and jurisdictions have its own rules and governed by respective local requirements or regulations. Imagine if you have one staff located in each location, say one in Sydney, one in China, one in Hong Kong, and the other one in Singapore. This means that your HR needs to operate with 4 sets of rules. So for Australia, you will need to follow the superannuation funds requirement. In China, you need to understand how the pension insurance works, whereas in Hong Kong, we have mandatory provident funds, the MPF systems, and at the same time, you also need to know how the CPF, the Central Provident Funds, operates in Singapore. Isn't that a lot just to cover 4 staff and only on the pensions contributions? So another example that I can give here is around FATCA reporting. So different jurisdictions have different practice or requirements when it comes to FATCA reporting. Taking Singapore and Hong Kong as an example, Singapore adopts Model 1 IGA, while Hong Kong operates under Model 2. With this, one would need to understand how to fulfill your FATCA requirements or obligations in Hong Kong and Singapore, yet you need different process and workflow to do the reporting in Hong Kong and Singapore. So for Hong Kong, or FFI, the foreign financial institutions, which are in scope for FATCA reporting, they were required to report directly to IRS, which is different from the Singapore FATCA reporting. As much as we want to align our operation process, it's somehow difficult to streamline and standardize the workflow when we operate in multiple jurisdictions. I hope I answer your questions here.
Yes, you did. Thank you so much. But with all these challenges, how can CSC support managers new to APAC?
Certainly, we can support. With our combined organizations, CSC have a number of APAC offices, including China, Hong Kong, Japan, India, Singapore, Australia, and New Zealand. From governance perspective, CSC has a strong control and governance framework at both global and local levels. As an example, our funds business in Hong Kong and Singapore is certified under SOC 1 and 2 reporting and undergo regular audits and testing by the Big Four firm. As for people, of the 7,500 staff we have globally, about 1/3 are based in Asia, sitting across different business units. Taking China as an example, we have more than 20 years experience operating in mainland China and more than 40 years in Hong Kong. The in-depth knowledge and local experience is very key for us to be able to support new GP in this very dynamic and active market. In terms of product offering, apart from fund solutions business, which we talk about this whole sessions, we also have strong corporate and legal service presence in this region. Capital market is another offering we have in APAC as well. So on top of governance, people, market knowledge, we are also well positioned to bridge any communications between international managers and investors when they operate in APAC.
Ling, you shared with us some overviews of how CSC can help. Can you give us a little bit more information on what CSC can do in the different areas?
From our service offering perspective, CSC provides end-to-end service to fund managers from the GP structures, be it onshore or offshore, to SPV level. This slide summarizes the type of service that we can offer. For GP structures, we can help to set up and maintain the structures. We can also cover the accounting and reporting work based on the local required accounting standard. Other than that, we can also support corporate secretarial, tax reporting, directorship, payroll, cash management, and board meeting support and other services as needed. In terms of funds and underlying structures, which is second half of this slide, we can add a fund administrator to the funds covering service for investors, funds itself, SPV, and its portfolios company. Our fund admin service can be broadly grouped into 4 categories, if I may. Number one, types of service that we have is around accounting and NAV calculations. We help to maintain the accounting books and records on behalf of the fund and its underlying SPV. We are capable of preparing reports in IFRS, US GAAP, or any local GAAP, including the PRC GAAP for China. You will be supported by qualified accountants with in-depth fund knowledge to cover complex calculations, including equalization calculations, waterfall, and many others. As part of our service, we will also cover matters relating to fund investors. We assist to maintain the registers of investors and manage the investors' due diligence checking based on the AML requirements of the applicable jurisdictions. Investor reporting is another key area that we cover as fund administrator. The third area that we can support is around FATCA and CRS reporting. We can act as the point of contact for the structures and assist with the reporting filing to tax authority on annual basis. Apart from accounting, investor services, FATCA and CRS reporting that I just mentioned, we also support the treasury operations and other administrative work on an ongoing basis. In the previous slide, we talked about the end-to-end service offering for funds in APAC. The fund service offering is managed by the Fund Solutions team, which you will now see at the middle sections of the slide. Yet this is not all we can offer from CSC in APAC. I will take this opportunity to also introduce the other 2 service units that we have in APAC. To start with, the Corporate and Legal Services, the CLS business unit. The CLS unit manage and provide service including company formations and incorporations, domiciliations and entity management, entity administrative service, payroll services, accounting and reporting, tax compliance services, corporate secretarial, treasury management, escrow, global subsidiary management, and private wealth clients services as well. Another product offering we have in APAC is capital market, the global capital market business line, which is the GCM. So the GCM teams provide service for often SPV structures, trustee service, loan administrations, escrow services, process agents, and facilities agents.
Lynn, thanks again for giving us such valuable information about the APAC marketplace. When it comes to solutioning within CSC, the corporation provides services, again, throughout 140 plus jurisdictions in the areas of business administration and compliance, transactions and lending, capital markets, fund solutions, domain security, and brand protection. The various services that are offered by CSC can be easily accessed by going to our website. If you would like more information, please reach out to us at any time, and we will be sure to connect with you to answer any questions that you might have. If you would like more information specific to the APAC market, please reach out to Ling directly. Her website and address is currently on the screen.